So the way we think about climate change when we're looking at investing is there are basically two different types of risks. The first one is physical risks. So this is all of the obvious things that you'd expect when you think about climate change, like floods, fires, different damages that might happen to assets or to property. And the second part of it is transition risk. All of the different disruptions that we might expect to the economy that might play out in particular sectors, geographies, or for particular companies as a result of the transition to net zero emissions. The way that we think about this for pensions is particularly, if you're thinking about like the typical kind of life cycle of a pension, you start maybe paying into it in your 20s and you're not going to be retiring until you're in your 60s. And so that's a really, really long-term investment process. And so climate change happens on short, medium and long-term horizons. So when we're thinking about how climate change plays out to pensions, we have to think about it across all of those investment horizons and really try and both minimise the risk of that playing out in a particular portfolio, but also look at the systemic issues within the economy and how we can address those as well. So the role that pension funds need to play is because we have that long-term investment horizon, we effectively need to think about how we both deal with the issues that climate change poses, but we also have to do it keeping in mind the types of levers that we actually have. And depending on the way a pension fund works and depending on which jurisdiction you're in, the size of the pension fund, you probably have a whole range of levers. The ones that we talk about a lot in this sector are stewardship. So you invest in a whole range of listed companies in the economy. You're able to then talk to those companies as one of the shareholders or owners of that company and sort of say to them, look, we'd really like you to look at climate risk and reduce the climate risk that you're facing as a company over time. Another one is public policy engagement. Regulators are interested in hearing from pension funds because we are an important market participant. So trying to strengthen the rules over time that we all participate in can really help even out some of that disruption to the economy that we're expecting as a result of climate change. And I would say the other lever we probably have is just investing. So we can make decisions about what we invest in, whether those things are higher emissions, lower emissions, whether they're climate solutions. You know, we can make really active capital allocation decisions. So choosing to have a really clear plan or vision for how you want to invest more in green or climate solutions can really help address the climate crisis as well.